Silver has been on an absolute tear lately, with prices just roaring higher. So what's behind this sudden explosive move? Okay, let's dive right in and break down what's really going on with the precious metal. As one market analyst put it, silver's nickname is the devil's metal for a reason. And right now, we're seeing exactly why. This is a story of squeezes, historical ratios, and some very, very serious risks. All right, first up, to really get what's happening, we need to look at the immediate trigger. There's a powerful market squeeze that's been fueling this whole rally. Pretty much all the experts are pointing to one key event that kicked this thing into high gear, a short squeeze. And it's been especially powerful over in the London market. So what in the world is a short squeeze? Well, think of it like a feedback loop. You've got traders betting the price will fall, but then, whoops, it spikes up instead. They get caught off guard and are forced to buy back the asset just to limit their losses. And what does that do? It pushes the price even higher. It's this forced buying that creates a massive, explosive surge. And this squeeze has rocketed silver past a hugely significant price level, $50. Now, this isn't just some random number. $50 was the big resistance level during the famous Hunt Brothers squeeze, and then again back in 2011. So the big question on everyone's mind is, will that old ceiling become the new floor? But here's the thing, the squeeze is only part of the story. To get the full picture, we have to look at silver's relationship with its big brother, gold. Because right now, silver is playing a serious game of catch-up. So here's the key question analysts are asking. Even though silver has been outperforming gold this year, when you look at it on a risk-adjusted basis, it's actually been lagging way behind. So is this rally the moment it finally starts to close that gap? And this is all because the two metals really play different roles. Gold, for the most part, is a store of value, a safe haven. Silver, on the other hand, is becoming more and more of an industrial metal. That makes silver way more sensitive to what the economy is doing, and it gives it roughly twice the volatility of gold. It's just a jumpier metal. Let's actually look at the numbers here. Over the last 5 years, both gold and silver are up a bit over 100%. But, and this is the important part, because silver is twice as volatile, to match gold on a risk-adjusted basis, it should, theoretically, be up 200%. This chart shows you that gap, that space between where silver is and where it should be. And what we might be seeing right now is silver finally making that move to catch up. This whole relationship brings us to the main tool analysts use to track these two metals against each other. And really, it all comes down to one key number that everyone, and I mean everyone, is watching right now, 80. So how do you actually measure this relationship in real time? How do you know if silver is cheap or if it's expensive compared to gold? Well, the answer is the gold to silver ratio. And it's pretty simple, actually. You just divide the price of gold by the price of silver. And right now, that ratio is hovering right around 80, which is widely considered a critical support level. And this table really helps put that number in context. For the last year, the ratio has basically been trading in a channel between 80 and 105. When it peaked up at 105, that was a signal of market stress. But for it to stay down around 80, where it is now, that suggests a pickup in the global economy and really strong industrial demand for silver. You could say 80 is the line in the sand. But of course, with high rewards comes high risk. And that brings us right back to that nickname. We need to take a second to really understand the inherent dangers of the devil's metal. This brings us to the double-edged sword of silver's volatility. The very same forces that can drive these absolutely massive short-covering rallies can reverse in a heartbeat, leading to falls that are just as sharp and just as sudden. So what you've got is a classic tug of war. On the bullish side, you've got the powerful squeeze and signs of a strengthening global economy. Awesome. But on the bearish side, you have some major risks. A key one to watch is stock market volatility. If the VIX index starts to climb up from its recent lows, that could put a ton of pressure on silver. There's also the risk that this rally is, as the source warned, sucking people in at these really high levels, basically setting them up for a potential fall. Okay, we've covered the squeeze, the relationship with gold, and the major risks. Let's pull this all together and boil it down to a final takeaway. So, what are the crucial points to remember here? First, a massive short squeeze is pushing prices past that key $50 mark. Second, silver is playing catch-up to gold, and it's being driven by its industrial side. Third, that gold to silver ratio around 80 is a sign of strength, but it's a super critical level to watch. And finally, the biggest risk on the table is that a rise in stock market volatility could turn the tide very, very quickly. Which leaves us with one final provocative question. Is silver's incredible roar a genuine sign of underlying economic strength and industrial demand? Or is it just the devil's dance, a volatile, short-term squeeze that could reverse just as fast as it began?